The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, how are you doing today? This is Darrell Martin right here on the Diagnostic Trading Hour on TFNN, and don't forget you can listen to us anytime online on your mobile phone at tfnn.mobi. Let's go ahead and check out where the markets are at right now. We got quadruple witching Friday, and that's what all the index options, the stock index options, stock options, and future index options all come to expire on the same day. So some rebalancing and things like that happening, people rolling over contracts, cause a little volatility. So we're getting a little further down move now. We got the S&P down about 9 pips, just up off its lows there. Looking on over, we'll check out the Nadex down 4. Russell has really just been pretty flat, sort of trying to buck the trend, be the lagger there. It's only down about half a point. It's sort of oscillating up and down right around settlement. We got the Dow down 89 points, really leading the way on the decline. Gold's down 35 points, giving it all back, man. It's just going, pushing for that triple dev. Just like you got a triple dev up, it's pushing for the triple dev down. And let's see what else we got over here. We got silver is down 5.8%. Like I said, the metal's just giving it back. And, of course, not as big of a move as we got over there the other day with the Fed funds rate, but still some massive, massive moves nevertheless. And let's check out what we got right here. We got our copper is down about almost 0.75% there. We got oil down 0.5% on the day. Natural gas currently down nearly 1%. We got corn down 8.5%, almost 2% move on corn, 1.5% move on soybeans, down 22 points. So, I mean, you're getting some pretty good volatility across the board. Looking at euro dollar, that is not giving you a lot of volatility. It is flat. So pound dollars gave you 22 pips down. We got Aussie dollar down 21. We got euro yen down 13. Really, the FX, of course, this is Friday. And one thing to remember, Friday is what times, your volatility on your indices, you'll sort of get it, and then it just chills. Why? Because Asia's asleep, gone, they're on holiday. They're Saturday, they're moving on. Same thing with Europe. They're heading on out and getting ready for the weekend. You got Aussie dollar down 21 pips, euro yen down 13, US yen down 1. Literally 1 pip. You got a pound yen down 12 pips. You got the dollar CAD up 28, and the U.S. franc is flat on the day, up just a partial pip at the moment. So that gives us where our current market wrap is, and we got a bunch of FOMC members talking today, so adding fuel to the fire. We should have done QE. It's really bad that we should have went ahead and started doing rolling back quantitative easing, all that. And some of the comments coming out, market isn't liking those statements, and been sort of selling off with the statements that have come out of those 3 conferences that happened today. And we had 3 in a row. We had member George, member Tarallo, and member Board all giving speeches pretty much back-to-back, like 12:30, 12:40, 12:55. So, this was a little triple Fed talk day. We're going to get the same thing, I believe, next Friday as well, so just be aware when those come up. And we have the Canadian core CPI took place this morning also. But with all that, let's go ahead and pull up and check out if maybe, just maybe, because we got some nice volatility. Only thing is I think we may be out of strikes, but I'm going to check just in case any potential spreads or binaries we might be able to do for the 125, 130 expirations over here on silver and gold. So let's see here. Well, we do have some strikes, and we do have some volatility, right? Because we got some big moves happening over here in gold and silver today. So I want to look and see what kind of opportunity is presented. Let's see. I'm looking over here at the gold contracts. I'm really going down to as tight of a trend as I can get at the moment. So with the kind of volatility we're getting, I just got to make it a little more sensitive there. And we'll go over here. We'll add in some time and sells, look at some depth of market. So throw that on there and zoom in. Maybe give us even a minute over here on gold, because right now it's like we're getting a little bit of a trend up on both silver and gold. See if they both continue. So with that gives us about 15 minutes till the close there on silver. We got 20 minutes till the close on gold, and they are popping on up right there. And looks like the 2190, pretty decent distance there on the 2190 on the silver contract. So you can go in and throw that in there, and basically what that means is that the market is going to have to close below 2190 in the next 15 minutes on silver for the trade to be a loss, and just, take a look, okay? So it's a decent support line. I mean, it's not perfect, but as far as the next 15 minutes or so, could work out pretty well. So that's sort of the contract to look at right there, the one I'm going to have my finger ready on to go. Possibly do that trade. And then on gold, we're going to have to watch a little bit longer because we'd have a lot more time. We have the extra 5 minutes. It doesn't sound like a lot, but we have a lot, and I'm not seeing as strong of a commitment. A couple of things that I'll look at. Let me show you this. Let me expand this out and point out a few things to you. Right over here, one of the things that you can see is we can look at time and sells. We can look at, and I'll just shrink my charts down, trying to make this where it's a little more visible for you. But time and sells just sort of shows you the order flow. What kind of contracts are coming in, what direction are they coming in, gives you a little bit of a heads up. Can be helpful. And then big thing, looking at the order dome, just sort of seeing what's sitting out there. Looking up 10 down 10 levels, see if there's any big significant points that the market would have to break through or be attracted to when trading. So like we had this up at 13. Let's see, it's a little harder to see. Let me zoom in over here on gold, make it a lot easier to see if I do this. There we go. So right here you see there's 24 contracts sitting over here, and there's now 32 at 1334.8. So the market's really just jumping right around this point. There's a lot of volume, and it's just jumping right all over it. We got another big area up here at 1335.2. And what's funny is 10 or 20 contracts is actually a decent amount in gold. You go over, you look at S&P. That's you don't ever see that. I don't think it matters what time of night it is. You don't see that. But now there's 42 contracts up at 1385.2. So showing a little bit of a resistance up there at that point. It could be a little bit of a magnet drawing the market to that price. Hey, there's some orders up there, but also that's a way to put a wall in on something that's not as liquid like gold, because the contract volume is so much smaller. But you're definitely seeing some decent-sized orders placed in. Nothing just massive. The biggest one I'm seeing, again, is up to 1385.2 with those 42, 43 contracts. And so that'd definitely be a price to watch. And you can see that, it's right up there. Let's see if it'll pop back up when it scrolls up. But, people are either they're basically putting limit orders in to be able to, get in, out of the market, etc. So stop limits. But these are going to be pure limits. So that's what you're seeing on the DOM. You're seeing the limits. And let's see here if they still got it. They're still there. So 1385.2. They keep pulling them and putting them back in. Sort of messing. 1335.2, I'm sorry. And see, they're pulling them out. Notice that, how it's 24, 42. When it gets away, you see 40. When it gets close, there it goes. See, it pops right through it. And so it becomes like a magnet. And you'll see them there, see them there. They're trying to attract the market up. And it's working. And now they got them up at 1336. There's 36 contracts right there. They're watching this pop. When it hits them, it's going to fly right through it. So, because there's so many contracts right there, and it'll slow down once it can't find any more, sellers. And then now we're getting it on the flip side. So now we see 48, 50, 70 contracts down here at 1335.5. There we go. Bam! Hits all of them. And they fill those out, see if they can move back up. So watch where those big orders are. It can really help if you're a scalper. If you're putting your stops in, things like that. I don't want to have a stop in front of that. I want to have a stop behind it. I may lose a couple points on slippage, but at the same time, at least it does have to break that order quantity. Okay? And if I'm getting in, I'd probably rather get in on the other side of it, because I don't want to be, you don't want it to go right up to that, not be able to fill those 40 contracts and then fall back down. So that's one of the most essential things if you're a scalping trader. If you're doing short-term trading as well, it's very, very helpful as a trader whenever you're watching these things to see the details and how they work, and just putting all the pieces together. And right now, let's say you're in that contract. I got filled on my silver contract. You could actually get out of the contract. We bought it. It was between 75 and 85, depending on what price you got, in or out at. You can actually get out right now. Okay. you can get out at $95 on that same contract. So, if you want to take profit on it, walk away, not worry about the last couple of minutes. Let's see here. I'll go back over here and show you silver. And I see it starting to pull back down. Maybe you're a little nervous. Get out. Take your profit right now. Not a bad thing to do. Book some money. Keep it. And so I'm taking mine. And I'm going to walk and just say thank you to the market. Appreciate it. And there's a lot of ways to do that. So if you bought it, make sure you sell out of it. Make sure you always switch that and sell out, okay? And I think that's extremely important that you understand the way that a market works and that your orders, you just got to flip it around, or you can use the scanner and flip it around as well. And, it's a pretty easy thing to do. Is just make sure you manage your order correctly. So buy, sell, flip contracts, etc. And let's see here. Trying to see what else might we have. And okay, so got that one up. And I want to see if we're going to have a gold trade. See, it's going really volatile, so I'm being careful on gold right now. I haven't hopped in on anything on that yet. And these are the EPC trades I talk about. They're short trades. You're in them. You're done. You're out. You don't spend a lot of time in the contract at all. Okay, so literally, you're talking 5 to 10 minutes, and trade's over. So it can be really dangerous to stay in these things longer than you're supposed to, because there is a decent amount of risk built into the trade. So make sure you have, just be aware of that, how the whole dynamic works on these trades, because you don't want to be in if it were to retrace back down. And it's pulling back right now, and you'll probably be okay on the trade. But do you want to chance it when you've already got the majority of the profit that can be made? Because you're at 90. What was it? I think you got the high right there. It's $96 on the binary, where you could have got out of the contract. Oh, why chance it? Why worry about it? And just book your profit. So there's two sides to money management, and we often get really focused on the risk management, which obviously is extremely important. But sometimes we get so focused on risk management we forget about proper profit management, and it's a very easy thing just to lose focus on in your trading. And the profit management just basically involves having a take profit plan, whether it's a trailing stop or whether it's a limit order. But having that plan before, and this is big, before you get in. Now, if you see something in the market that tells you, hey, you need to get out, not because you're afraid of losing, not because of money, but something on the chart tells you, hey, you need to, be very careful, whatever you're seeing, volume spikes, and, there's different things like that that really should, raise your alert level. That's one thing. But you should have a plan up front of how am I going to get out of the trade? Am I going to hold it to expiration? Am I going to take profit at this price? What is your profit management plan? Without it, you have no risk-reward ratio in mind. You have no idea what's going on. Anyways, all right, stay right there. We'll be right back after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, we're going back here to the Diagnostic Trading Hour. So, see, that's why we talk about taking that.
With the launch of Tiger TV, TFNN has...
I guess we're back. All right, so anyways, that's why we talk about taking the profit on those trades, because the thing can go back, it can retrace, right? So profit management being king. Remember I said take that thing off at $95, $96. We were right up there, and we're really close. Again, it still may expire in the money, but it's really close. And it wasn't when we took the profit. Okay, so we scroll way down here, look at this thing, and I mean, it's got down to 905. And I got down to actually 900. And so if you didn't take it off, I mean, risk management would have said actually get out at that point. You would have, taken a loss if you followed the exit plan. But if you follow the profit management exit plan, you'd already be out of the trade. You wouldn't have had a loss. Or if you're in right now and you're not following the risk management exit plan when it hits the strike like you should have, then you're going to be sweating it out because we're really close. And I mean, we only got, looks like, okay, boom, there it is. So you're good. Okay. It expired in the money. You're okay. Trade worked out. But why would you want to let it get that close? There's no need to. Okay, over a few dollars. Yeah, I know a few dollars is a large percent, but losing, $70 when you're trying to make 30, losing 25 when you're trying to make 75, losing 80 when you're trying to make 20. That hurts a lot more than not making a few bucks at the top. So don't be greedy. Don't go for 100% of the profit if you don't have to, okay? And what I mean if you don't have to is, it depends on what you get your fill for. But anyway, so trade worked out. We're profitable. And good trade. So now let's go ahead. Let's check out what we got over here. Left on gold. See if there's anything. Got a few minutes left. Looks like nothing is popping up. And sometimes you'll see this and people go, it's not working. Nothing's showing. Okay, so lesson number 1. Hit reset filters on the scanner. Scroll on back down. Look at all these. They're there. Okay, it's basically trading right at the strike of 1333. So see that we're at 1332.8 right now. So that would not be the premium collection trade, because you're talking an over-under bet. We're not talking about over-under bets. We don't want over-under bets, okay? We want to be able to make high probability trade setups with decent risk management in the process, and that's just how we trade the premium collection trades. And they're cool trades. They're short. They're 5-10 minutes, and if you'll follow the rules, if you'll put the pieces together and follow them, then it will work really well for you. And the way to test that out, demo. Okay, I cannot stress that enough. And when you go live, risk management. You cannot over risk your account. You will blow it out. Number 1 issue of traders is bad risk management. Number 2 is lack of patience. So just taking a trade just because it's calling your name. And I was joking with some traders the other day. They said we got to make some sort of indicator that'll shock you or something if you try to do too high of a risk contract. You're going to do too many to just send a little electric shock right through the keyboard or mouse. But just something to keep you in line. But obviously you're going to get the shock anyway on the other end when you lose. The problem is when you win. And it sounds funny, but that actually is one of the worst things that can happen to you as a trader. Is when you break the rules and you make money, right? So you break the rules on a contract, you end up being profitable, you think you're a trading god all of a sudden, and so you start creating bad habits. And every once in a while you get on this streak, and where you're just making money hand over fist, and man, you're it. You've got it. You're going to be a billionaire in a week. And so you start going bigger and bigger and bigger. The problem is, then all of a sudden, you have a day that just smacks you, and you're like, oh wow, I gotta make it back. Because you can, because you're a trading god, right? And this is how it goes. We've all been there, and so you go in there and you try to do this, and you know how it works, man. It kills you every time, and I don't want that to happen, obviously, to you. So you got to keep everything in check. You got to look at it. You got to go, you know what? There's just not a good trade. I'm not going to take it. I'm not going to risk too much, and I'm not going to let my ego get ahead of me. And it's funny, every once in a while I'll make a mistake and I'll make money on it. Every once in a while I'll make a mistake and I'll lose money on it. The ones that you lose money on, it's easy to forget. It's amazing, right? How easily we forget when we make a mistake and we lose, because we want to forget the pain, okay? So we totally want to forget the pain. And with that, I go, okay, what, I let it go. Well, you can't do that. You got to journal your mistakes. All right? Figure out what you did wrong so you don't repeat it. Don't let go of that pain so you don't feel that pain again. And then we'll be back right here in just a minute. You want to make sure you remember the things you do right and don't reward yourself for the things you do wrong. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome back here to the Diagnostic Trading Hour. And looks like we got a call right now. We got John from Las Vegas. How you doing, John?
Good. How are you, Darrell?
Hey, man, I'm doing great. What's going on?
Enjoy the show. I had a question about the expiration trades. There's been times I've noticed, sometimes you'll have anywhere from a 6 to 12 tick lead advantage going into that 2-minute dark zone. And I've seen it go against you. What do you do at that point? Do you try to still get out of it? Do you set your price at 50 and just take your chances and hope somebody takes it?
That's usually what I do, yeah. And believe it or not, people do.
Okay.
So I'll also watch, because every once in a while you'll see somebody who doesn't know what they're doing do the exact opposite wrong trade. Like they're literally giving you like a guaranteed win by going the wrong way, which allows you to get out. Sometimes I'm able to get out at like break even. So I'll look in there, and I'll definitely, look to do that, if it goes against you. You may or may not get filled. So, but what you got to be really careful on that 50, okay, is make sure you're definitely out of the money when you put it in. Because, like, let's say it goes out of the money, you put in at 50, but then let's say it runs back in the money, somebody's going to take it from you, right? Because they're going to be able to buy at 50, and, like, all of a sudden there's 5 ticks in the money, there's 5 seconds to expiration. They're going to grab that trade and make $50.
Okay.
So you got to be, don't like just put it in and walk. Like put it in, but if that thing goes back in the money, you're gonna have to pull it out. Otherwise, you could actually have a winning trade, that you basically handed somebody a free $50 trade.
Okay, gotcha. As far as I hear you talking about like quotes like so many contracts are left on tick, or I'm assuming you're talking about tickets, but are we talking about the right thing? Because you're talking about like, oh, there's so many contracts on this side or something. I was a little confused at what you were talking with that.
I'm looking at the depth of market. Active trader is what it's called on Thinkorswim. DOM is what it's called on most platforms. And basically it's where you actually see the orders that are existing in the market currently. So you can see at least the limit orders that other traders have out there. And I'm only looking for like a substantial quantity difference. Like there's 32 limit sells up here, on gold right now. There's 23 on silver. That's a pretty decent amount. On silver you got like the 28.825, and up here you have 28.885, both with like 20 contracts. So it's almost like a zone that it's just going to be bouncing in between, which is what we just saw, bouncing in between that zone. And just be aware, like it'll be attracted to those high quantity contract orders, and it may or may not bust through them, but just be aware of them. They can be great resistance to support zones, but if it does break through them, it's going to pop, like 10, 20, 30 ticks, like right through it. So, but everything else is just market noise. But those big orders, sometimes it's the big boys manipulating the market, and it's not representative of like every limit. 'Cause you're not going to see stop limits, you're not going to see iceberg limits, things like that. But they'll go in, sometimes they'll park like 100 contracts, and people just won't touch it. They're just like, okay, well, it'll just come close to it, but they won't even try to hit it because it's so many and people are afraid of that. So it's a way to sort of like park the market if you want to. You'll see it during lunch. It'll happen. You can see it close to any kind of expiration time. You'll definitely see that come into play. And it's just one of those, it's a style thing. It's something that you have to watch the DOM, and the more you watch it, you'll start noting the dynamic, and it's sort of one of take screenshots, like with Jing. You can get that from techsmith.com for free. And take a screenshot, make a note, sort of like what do you think is going to happen, then see what happens, and then write down what happened. And it's just a process. You can sit there for a day or two, watch the DOM, and pick it up. One of my mentors that taught me how to trade, I sat down at his trading desk out in New York, and he sat there, and all I had was a DOM. He wouldn't let me look at charts or anything. We were just doing scalping. And he had me trade purely on the DOM and taught me how to do it. And I sat there, and I think we did like 100 trades in about 30 minutes. And cleaned up, did pretty nice, made some cash. He's like, thanks, because it was his account, his live account, and I think I made him like $1,000. But just sitting there going in for like 2-3 ticks at a time. But it was just watching the DOM and seeing the order flow. And it's mainly just looking for those high support resistance zones. But the reason I like it for the expiration premium collection is because in essence you are scalping. You're basically going for, even though like the market to be flat, move up a few ticks, not move down more than a few ticks. And so if it can give you any kind of alert warning, and then over on the time and sells, like what happens if you see like, normally gold has like 1, 5, 3, maybe 10 contracts at a time going through, but all of a sudden you start seeing like 10, 20, 10, 20, 10, 20, like that's a real sell-off. Like people are dumping positions. So it's just a couple things that you have to watch, and it's not as ABC systematic as I'd like it to be. But it is helpful. One of the other things that I like that Thinkorswim does, and I know other platforms do this, but they'll actually track the volume as long as you have it open. I wish I kept it all day. But as long as you have it open, they'll track the volume at a certain price. And so you can see if you're looking at my screen, sort of like where that volume is, over here on the left side. And so not only is it volume by time, but you can look at volume by price. And you can see, we have a lot of volume right here at 1332.5, making that a very heavy resistance zone. So a lot of orders being filled there, but not as many orders being filled below that point. And so that could also be something that could help you in determining if you wanted to do a premium collection trade, say, right below 1332.5.
Okay, great. That helps me out a little bit. I will definitely look at that.
So yeah, it's definitely a little bit of an art. And again, set that take profit if you can get out. And I'll even sometimes set take profits if we go in the dark zone. Like let's say you're in the money and you're in it, you can set it like there's no go in and set your take profit for $97. Maybe somebody will fill it. And so you don't just have to get out if it's going against you. You could put a set take profit. Somebody may take the $3 trade because basically you're getting out. And if let's say you buy at 70 and you put a sell at 97, let's say somebody fills that, they're only taking a $3 risk. Okay, but now you have no risk on the trade. So, especially on like silver or gold, it can move a point in a heartbeat, right? So they're going in for a $3 risk, and they may clean up and make $97. they'll probably lose $3 like over and over, like basically pretty much constantly. But you no longer have any risk. So you're giving up a few bucks, but you're eliminating the chance of a loss at the same time by locking it in.
Okay, gotcha. I keep forgetting about taking the profit inside the dark zone. Also, that's a good point.
And those will get filled more often than you think. So, because people, like, especially if it's semi-close, somebody will go in and go, I'll take that for $3. And like, you're the only trade sitting out there, right? Because, you know, I mean, there may be there may be other trades, but I mean, there's not that many during the dark zone, and you may have somebody take it. So,
okay, that helps me out a lot. I appreciate it, and I enjoy the show. I can listen to it most of the time.
Awesome, appreciate you listening. Thank you for calling in.
Okay, have a good day. Take care.
Hey, you too, man. Bye. All right. Well, great call there from John. Premium Collection. Just it's a style system trade. You got system for money management, for entry, for exiting before the dark zone. You got a little bit of style there at the end. In that last 2 minutes, it gets a little bit scary because market makers don't really quote in the last 2 minutes because there's no way to have a true probability with 120 seconds on the clock of where something's going to be within a few ticks. So they pull out, then you're basically depending on other traders. So if I can get out before those 2 minutes, then that just alleviates, like I said, all concern of having a winning trade turn into a losing trade. And they're cool. They're 5 minutes. I know some guys that trade. They literally spend 25, 30 minutes a day trading, and that's it. One guy runs a business. He has a big fishery up in Alaska. I go out there, and he'll trade at night for about 30 minutes, and that's all he trades. He just does premium collection. So he'll either do the 7 o'clock or the 11 o'clock premium collection, and that's how he makes his extra money. And he goes in and trying to make about 5% a day doing that. But pretty sweet way to trade. And for those who don't have a lot of time, and even if you have a lot of time, I mean, you can do these every hour, or just about every hour. There's 23 expirations a day on Nadex. All right, so let's check out what else we got coming up, okay? And I know I talked about this a little bit yesterday, but I just want to make sure that you have your plan in place for next week. We don't have any big major news announcements happening, but just some reminders for you. Let's see, nothing happening tomorrow, Sunday. We do have the German federal elections. That could have some impact on the euro dollar itself, okay? Also, the Japan is going to have a bank holiday, so that can have some impact on the yen pair. So expect a little bit of a less volatility on the yen and more volatility on the euro with those elections coming out. Of course, we're coming up on the debt debate, whatever. I don't know how many times we went through that now, so just enjoy the volatility. Embrace it. Over here, we got Monday. You're going to have French and German manufacturing PMI. Again, not so much a tradable straddle strangle type event on Nadex, but whether you're futures 6E trader, euro dollar spot trader, Nadex binary or spread trader, just be aware of that. Probably 20-30 pip movement right there off the German flash manufacturing PMI. A lot of euro announcements coming out, like one after the other. And then you're going to have the ECB president, Draghi, giving a little speech at 9 a.m. And it's pretty much like all euro Monday. I mean, literally, you got 3 o'clock, you got French flash manufacturing PMI. 3 o'clock, you have French flash services PMI. 3:30, you got German flash manufacturing PMI. 3:30, you got German flash services PMI. 4 a.m., you have the Euro flash manufacturing PMI and flash services PMI. 6 a.m., you got the German BUBA, I don't know what that is, monthly report. 9 a.m., you got you have Draghi speaking. So, I mean, you got a lot of Euro activity. We got to get some good Euro volatility on Monday between the elections in Germany on Sunday and all the Euro, medium announcements coming out. It could probably be a pretty nice pair to trade. Go at euro dollar. And then, of course, Japan will no longer be on holiday, so they'll be waking back up. So euro dollar, euro yen be probably the place I'd be checking out. And then, let's see, we're going to have a couple more we've got FOMC member Dudley speaking. Switzerland's going to have Chairman Jordan. He's going to be having a little speech in the morning as well, 11:15, so that could add some dollar franc volatility for you. And monetary policy board there member Broadbent over in Britain is going to be speaking at 2 o'clock. So a lot of speeches coming out. It's I think they're starting to become rock stars. We didn't hear from them as much, and all of a sudden we're hearing from all these members and chairmans of all the Federal Reserves around the world, and they're all scheduling themselves. It's becoming like the hot topic. And, I'm sure they're all going to have their own books, and several of them already do. So, just one way to pick it on up. Let's see what we got on Tuesday. Let's see. Euro's going to have a couple things, nothing that major. We have core retail sales on the CAD, so that'll add some volatility, and consumer confidence here in the U.S. Scroll on over to Wednesday. We're going to get the core durable good orders at 8:30, and we'll have new home sales at 10. Both of those ought to have some, decent volatility in them. And like I said, I'll go over the stat. Those are potentially statistical trades. I'll pull up the stats, and we'll see on Monday and Tuesday. Over on Thursday, we'll have current account out of Britain, final GDP. Expect some decent volatility, but not so much a tradable event. 8:30, we got unemployment claims and final GDP in the U.S. Sort of the same thing. Expect some decent volatility. And then we're going to have pending home sales. It's a big home sales, home announcement week. Expect some volatility in copper with all of these home sales announcements coming out 10 a.m. Also, all the home sales report will be really important because part of the whole Fed forward-looking thing is home sales and everything are a big precursor to a financial recovery and measuring the wealth, the strength of a financial recovery, supposedly. So, because they affect so many different areas in the, in the economy. So that's going to have a big impact as well. And you got to love how, Bernanke, after the speech on Wednesday, is like, well, we're not going to do it right now, but we could do it later this year. And by the way, no press conference is required. And scaling back QE can happen at any time. So we reserve the right to do it whenever we want to. We don't have to wait till a meeting, and we don't have to wait till a press conference. I could announce it at any time later this year. So just adding to the uncertainty in the market, which uncertainty adds to volatility. Volatility adds to day trader's paradise. But so just enjoy it. And let's see, what else do we got? A couple other FOMC members, man, like I said, they're just on the lineup. And then going on Friday, we're going to have tons of FOMC members talking all day long. Draghi's going to come out and make another speech. So on Friday morning at 5 a.m. That literally is the news next week. We don't have this. I mean, it's not a big week. Okay? So just be aware of that. So that way you're not going into it and thinking that it's going to be, some massive news event-driven week. But it'll pick back up and things will keep going. But, I'm curious to see how next week turns out with the lack of news and post-FOMC. We'll have to just, watch it. Make sure you watch for choppy markets and things like that. But get ready for Monday. Like I said, we got to get some nice Euro trades going. And that, of course, could affect everything else. All right, so let's look at a couple more pieces and do a review. But let's see right here what we got on Nadex and what can you do with it? How can you learn how to do it? Well, hop on over here to TFNN.com. Okay? Step 1. Step 2. Click on the Nadex banner on the right side of the page. Step 3. Go to Trading, Demo Trading Account, and get a free demo trading account. Then fill in your username, first name, last name, phone number, email address, and click Apply for Demo. All right, so apply that demo. You'll get a reply back in seconds, and you'll be able to log in. Okay? And you'll log in just up here at the top right corner. That's how you get a demo trading account. When you get back, I'll tell you how to get access to some education and access to the spread scanner so you can start taking advantage of it and learning how you might want to implement this in your own trading and at least test it out for free to see if it's something that might work for you. All right, stay right there. We'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.6% profit to an incredible 48% profit in just one equity. And all 6 of those winning trades had been initiated no earlier than just the previous month. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began, and right now you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber, as this volatile gold market provides trading opportunities after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial to the Gold Report today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome back here to the Diagnostic Trading Hour. So I was telling you, step 1, go to TFNN.com. Step 2, click on Nadex. Step 3, click on Trading Demo Trading Account. And then, of course, there's education stuff built into the site, which is great. They have a great YouTube channel as well. But also trading, just direct trading. If you want to get trading from me, trading that I put together, go ahead and hop in here and check out the Diagnostic Box Spread Analyzer subscription. Get a free 2-week trial, and that'll give you access to the scanner you see I'm using that's doing all the math for you. Also, as an area to send me direct questions, I'm happy to answer them, get them all the time. Hop in there and let you know. And usually there's very simple assumptions that are incorrect that people mistake, and when they ask questions, they can easily correct it and helping them out. So just different pieces like that. You put all the pieces together, have the right knowledge, have the right instrument for you. And regarding the right instrument for you, we were talking about this a little bit earlier with Tommy about making sure you have good risk management, and the spreads on Nadex actually allow you to take your risk down, where the futures are, you're compounding your risk instead of just multiplying it. So you can get a lot better risk on the spreads to have better risk management than you can on just normal futures contracts. Not only the cap on risk, but also the size of risk per contract. Got a quick question right here. We got Earl from Orlando about binaries. How you doing, man?
Hello.
Hey there. How you doing?
Good. How are you doing? Quick question.
Hey, doing great.
Great. All right. Love the news trades. Did my first one last week on the Australian dollar. It came out beautifully. I mean, just beautiful trade and stuff like that. So then I tried.
That's awesome.
So then we did the the butterflies. Okay, you were talking about them before going into the news of the FOMC meeting.
Oh, that was so tough. Yeah, were you watching that show? Like, there was nothing there. Yeah, we tried to force like one trade, and I usually do 60 contracts. Correct. I'll do 10 on all 6. Yeah. I did like 5 on 1 because I'm like, this thing's just tight. So yeah, that was a rough trade.
Yeah, because I'd seen you do them before. I do a ton of them before on previous FOMC meetings. Just listening to your show, and I'm like, wow, it was just really weird to see that happening. But what I was talking about was the scanner. You put in the simulated range. So you put in for like 13 for half an hour before, trying to get that see what you could get. Correct?
Exactly. So I'll go in here on like the binary scanner for the butterflies, and then I'll put I'll throw something like $1 up, and then I'll put 65 to 95.
Correct. Which I do. Yep.
And then you can put in the money; doesn't really matter. And then I'll narrow it down to whenever I want it to expire. So, like, say within the next hour. Okay.
Right.
And then I'll scroll down, and then it'll show me like what exists. Actually got an hour and 2 minutes. Let me add it just for now for the example. And it'll show me, if there's any contracts that match up. So then, like right here, there's probably about right now, this time of day with weeklies and dailies and intradays, we probably have about 60 contracts on there.
Okay.
That's my guess. Like if I reset the filters.
Right.
Yeah, see, these are all the contracts that currently exist. So we take all those contracts, and just by putting, 65 to 95, and usually I narrow this down, but we're at the end of Friday, so it doesn't matter. And I just get 4 contracts. Those are my only choices.
At that point in time, correct.
Yeah, and what's really cool is it'll put the daily, intraday, and sometimes weekly, like on Friday, like right into the mix. Mm-hmm. And so I can look at it and go, you know what, I can get 2 more ticks of distance, but I'm going to pay $6 for it over here. I can get 3 more ticks. I'm going to pay, what is that, 35, 20, that's like $12. So I got to decide if that's worth it or not. But, like I probably would go on, if I was looking at doing this trade right now, I'd be looking at like the 35.27, 35.40. Does that answer your question as far as how to find them?
No, not how to. No, my question was more on the news portion of it, on the straddle, strangle one. That was more my question.
Well, call me back more Monday, and I'll go into it in detail with you. Okay?
Right.
Like we'll go through it step by step. All right. Thank you.
Bye.
Hey, you bet, man. Have a great day.
All right.
Thanks for listening. All right. We'll see y'all next week.
Questions are the answer. You want a better life? Ask a better question. My driving force in life is, how can I become the intelligence behind financial freedom? It's why I take massive action. It's why I've invested over 10,000 hours and thousands of dollars to create the answer, the ultimate money machine. Hi, I'm Steve Rhodes, and on Friday, September 27th, I'll be hosting a one-day online master trader course, The Ultimate Money Machine, where I'll teach you the exact same trading strategies that I use every day when trading the markets and advising my newsletter subscribers. Learn how to precisely identify the market's next move, when to pull the trigger by letting the market commit to you before you commit to it, and how to manage your trade to maximize your results, just as we did in the month of August, when I advised my newsletter subscribers of 11 new trades resulting in 1 loss and a combined profit of 129%. Our next move? It's days away. The cost of this course, $595, less than $2.50 per trading session over the next year. If you're looking for the answer, it's the Ultimate Money Machine. All the details on the front page of TFNN.com.